What's up, investors? My name is Artem Dikarev, and in a couple of minutes you will know what is passive investing. I will first give you a professional definition and then I will explain it as easy as I can with examples. And if you want to learn personal finances and investing by watching such short videos, please consider subscribing to my channel and liking this video to show the support for the young creator. Many more videos are coming. Thank you so much and let's get straight to the point. Alright, so passive investing is an investment strategy that involves minimal amount of buying and selling activities, assuming this will maximize your potential returns. Passive investing is the opposite to active investing. Watch my previous video to see what active investing means. And here is an example. If you want to spend as little time as possible investing while enjoying the benefits that investing has to offer, you are more than welcome to try passive investing strategy. And one of the most common such strategies is called buy and hold, and its title is pretty self-explanatory. Passive investing means that you should not care about short-term price fluctuations. You should absolutely ignore every single YouTube investing guru that will be crying and begging you to sell some of your companies. You need to select your own companies. You need to analyze your potential investments, look into their future perspectives, and make your very own decision whether you want to invest in them or not. If you're confident in your investments, there should be nothing that can prove you otherwise. You can keep track of your companies as little as once every 3 months. As soon as any company from your investment portfolio releases quarterly financial report, take a look at it, and if everything goes in accordance with the plan, you can forget about this company for another 3 months. Or you can implement even simpler investing strategy and just invest in index funds, such as the ones which track S&P 500 index. I will talk about index fund investing in my next video. But long story short, it is even easier and faster than individual companies' passive investing. Historically, passive investing has always been beating active investing in long-term perspective. So my question is, why would you spend so much time and energy looking for and investing in perfect companies when you can simply invest in one index fund and beat almost every single active trader by the time you're ready to retire? If you still have any questions after watching this video, feel free to leave a comment and I'll personally reply to you. Check my other videos to see if there's anything else you want to learn about personal finances and investing. Thank you all so much for spending this couple of minutes with me. I really hope there was something new that you learned today and it was straight to the point.